Right.
So all in all, Carl, it's a wonderful opportunity we have, and we continue to look forward to the data centers and working very closely with it.
Chris, appreciate it very much.
Carl,
After
thank
what's
you.
been, I'm sure, a challenging couple of days. Chris Womack over at Southern. Busy week ahead between earnings and the Fed.
Yeah, Fed decision, and I don't know, any day now we'll find out who the next Fed chair is going to be as well. We don't know when that's coming.
Let's get to the judge.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, this critical week ahead for the markets. As big tech earnings and the Fed meeting are looming, we discuss and debate with the investment committee. Joining me for the hour, Joe Terranova, Steve Weiss, and Jim Lebenthal. Let's check the markets to see how we're doing to start this week out. And we're green across the board, except for the Russell, which is giving some back. It's been the standout. But, Joe, the big story clearly is what lies ahead. You get the Fed decision on Wednesday, Microsoft, Meta, and Tesla on Wednesday, Apple's Thursday. Friday is the deadline to avert another potential government shutdown. By the way, the prediction markets are seeing a spike in bets on a shutdown with a 78 to 90% chance, depending if you're looking at Polymarket or Kalshi, which we have a partnership with. We'll get to everything around that. Big market moves that we need to discuss. Gold above 5,100 for the first time ever. There's an article out today. Gold has overtaken the dollar as the largest global reserve asset. That's certainly notable. What do you make of what's happening within the markets and all of these other areas that are stealing a little bit of the thunder as we look ahead to these critical earnings midweek?
The volatility that we expected in 2026, it's here. It's present. We're seeing a lot of the trends that we're building at the end of the fourth quarter, somewhat parabolic in their nature right now. You mentioned gold. Gold is giving speculators the ability to hedge portfolios and they're getting paid to do so. So it's a combination of a parabolic momentum move and the debasement trade, the concerns that are out there in terms of owning currencies. The dollar continues to slide, or maybe owning bonds. We see what's going on in Japan. And global central banks are diversifying away from currencies and bonds, and they are buyers of gold. Just look at what Poland announced recently, one of the largest buyers of gold from a country right now in central banks. So I think it's the volatility that really is the headline. We'll talk about what we're seeing in the Mag 7, the relationship with semis and software, but the volatility is giving you ending. That's really the question as you begin to look forward. We're going to hear from all of these companies over the next 10 days about it.
What's interesting, Steph, is that many of these names are running into the prints, which does something to the bar. Maybe it raises it. I'm not sure because the stocks hadn't performed all that well going into the numbers. However, if you look at the 1 week performance from many of these, Meta is up 11% over 1 week. You own that. Nvidia is up 6.5%. Apple's up 5%. This is one of the few periods, really recently, where you can look over any kind of short period of time and say, wow, they're all up, because they haven't been trading all together as a monolith. But they have over the last week, trying to potentially anticipate what I think the street thinks is going to be a good reporting from these companies.
I think the reports are all going to be good, but to your point on the performance of these stocks, yes, they've had a good week or two, but they are all, except Google, they are all down from their highs. Meta is still down 15% from its highs. Microsoft down 12%, Apple down 10%. I actually like the setup of that, when they're down, and yet they are starting to see a recovery. I do think that Joe is right about the spend. I think the spend is going higher, but to me, the most important thing is free cash flow after the spend. And all of these companies are going to still have considerable free cash flow. So Meta is going to have $16 billion this year. Amazon is going to have $41 billion in free cash flow this year. Microsoft at $77 billion, et cetera, et cetera. So they're all going to still have free cash flow and flexibility to continue to invest as they should, given the AI revolution. As a whole, earnings are running at about 9% so far.
They are. That's ahead of expectations.
And That is ahead, and I actually think you're on track to do something like 12, 13%. There are some aggressive targets, Scott, out there of 16, 17%. I'm not there. I'm in 12, 13 in a 3.5%, 4% GDP world, and it's not just revenues, it's not just earnings, it's not just revenues, it's also margins, which you know I pay very close attention.
Markets, the S&P 500 hitting an intraday record, actually closing slightly at a record high, just barely, but still a record. The Nasdaq up nearly 1% as AI optimism comes back to Wall Street ahead of mega cap earnings reports. And we are watching some after-hours movers. Texas Instruments moving higher. That conference call kicking off after those results. The stock up nearly 6%. We will get you any news that comes out of that call. Seagate slightly lower despite better than expected earnings and guidance. And Qorvo down big as guidance disappoints there. The high end of its ranges for earnings and revenue are below the consensus forecast.
Well, the U.S. dollar under pressure again today and hitting a new 4-month low. The president speaking about the currency earlier in the hour. Here's what he had to say about its recent weakness.
Are you comfortable, Mr. President, with the current value of the dollar? Do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollar's doing great. You
want to see it decline?
You know, it's very interesting. If you look at China and Japan, I used to fight like hell with them because they always wanted to devalue their yen. You know that? The yen and the yuan. And they'd always want to devalue it. They devalue. And I said, not fair that you devalue because it's hard to compete when they devalue. But they always fought, no, our dollar's very good.
Let's bring in Rick Santelli. So much for strong dollar policy, Rick.
You know, where do I begin with this? You know, the big obstacle with this administration is dealing with the compounding nature of inflation from the Biden administration. But a weaker dollar is going to make everything coming over the border more expensive. That isn't going to help. And I know the answer to that. The president would probably say, well, we're onshoring. But the problem is the timeline. I don't think the onshoring is on the same timeline as the cost of imports coming in from other countries, price increases with a weaker dollar. And therein lies the rub. And, you know, with gold keep going up, with the fiat currencies, the reserve currency, the dollar, gets hit the most. And if you look at the euro yen, pound yen, dollar yen, all of them are looking a little weaker against the yen. But do remember this, just a few days.
AI prints might be the highest year on year since February of last year. How big of a concern?
I don't think it's a big concern at all. You've got to, if I wake up in the morning and I put on my Fed goggles and I look at the world through their lens, which is what you have to do if you're a Fed watcher, then you're going to say, yeah, but, right? Inflation expectations are not unanchored. They've not been rising. There's not an expectation that inflation is going to remain this high going forward. And if you grab onto forecasts from the Fed's own staff and the regional banks and private sector economists, it all points to once you make that annual lap around the base effect of when inflation was rising again, right, that mechanically means that it's coming down later this year. Right. So I think that's why you see bets for the next Fed cut really concentrating around coming no sooner than June. And I do think that's a risk. I think expectations for the Fed to wait until June are probably a little overblown. I think we should more properly recognize that there are risks on both sides that they wait even longer or that they have to go sooner because of the labor market. Interesting.
We'll talk about personnel next time. Obviously, that conversation continues to inch along, Ellen. Appreciate the help today, as always. Good to see you.
Yeah, good to
Ellen
see you.
Zimmer. Sarah.
Carla, here at the Trump Accounts Summit in Washington, D.C., we are awaiting the president, who's going to take the stage in just a few minutes. And in the meantime, joining me is one of the lawmakers that made this happen, Texas Senator Ted Cruz. Senator, it's good to see you.
Good to be with you.
And we were just talking to Brad Gerstner, who was telling us about how he came up with the idea for Trump Accounts. How did it get over to you and to Congress?
Well, Brad has become a dear friend, and it's a funny story. So a year and a half ago, April 2 years ago, I was playing poker in Vegas. I like to play poker, and I do a fundraiser.
This is a brand new market. You know, there aren't many humanoid robots out there yet. And I mean, there's a lot of competition. We asked about that on the call yesterday. But these are moments in time where you have to make bets and sort of model things out that really don't exist today.
Would you rather I think this is why people love the stock. That's why they love Musk, right? That he's never going to give you the boring, yeah, we beat the quarter by 2 cents. And, here's our visibility to the out year, right? He's like, no, we're ending one production line and we're building humanoid robots. And also, I mean, Cybercab, is that part of this as well?
Yeah, so the Cybercab is going to be the steering wheel-less vehicle that sort of is the beginning of their robo-taxi moment. They will have Model 3s and Model Ys that can become robo-taxis, but this is the futuristic-looking vehicle that's not going to have a steering wheel, that's going to transport vehicle like an Uber does or a Lyft does in multiple markets across the country and eventually across the world. And what they said on the call yesterday, they plan to make more of those and sell more of those than they have every other vehicle in their lineup. So it's a really big deal. And what they're likely going to do, in our opinion, is own some of those themselves and have their own service, then potentially sell those to customers who can then tap into the Tesla network and create income for themselves by putting their vehicles onto the Tesla robotaxi network.
It's still a $1.4 trillion company, close to an all-time high for the stock. So, at this point, it's as much about the dream and the vision of Musk as it is about anything to do with. If you were to just literally analyze the financials in the absence of the genius of Musk, what would this company be worth?
I mean, look, they've been a disruptor in this market for well over a decade, and we've been asked this question: how do you value Tesla relative to the automakers? And you can sort of flip that question on its head and say, how do you value Google relative to media companies? How do you value Netflix relative to media companies? How do you value Amazon relative to retailers? It's a disruptor, and now they're sort of disrupting themselves, right? They're going to take a giant leap forward, get into new markets, probably be free cash flow negative in 20.
Aftermath, along with the rest of tech today. Joining me for the hour, Stephanie Link, Jim Lebenthal, Rob Seach, and Josh Brown. Let's go to the markets where we are red across the board today with the Russell 2000, because rates, watching that obviously, and what's happening in some other areas of the market, the Russell's given back more than anything else, but we do have declines across the board. All right, so Warsh is the nominee. Everybody knows that by now. The dollar's move today is interesting. Silver, let's just look at silver. Silver is getting obliterated. Gold is down too, but these have been, show now the longer view, so you can see the amazing, unsustainable, some have suggested, run-ups in all of this. Why is this happening today? Well, there is a view that Fed independence is safe with Mr. Warsh. And by the way, BlackRock's Rick Reeder would have delivered, I think, the same sort of feeling in the markets. Of Mr. Reeder, he told me about not being chosen, quote, "This has been an incredible honor for me. I congratulate Kevin on his nomination and think he will serve the institution and our nation very well." I don't want to have a policy conversation. I want to have a market conversation. Gold and silver. A lot of people have been piling in there. A lot of retail has been propelling silver's move. It's almost been meme-ish. Is this over?
It may be on pause, Scott, but you're exactly right to use the word meme-ish. Now, just a little backdrop. We've talked a lot on the show about how retail is no longer the dumb money. In fact, it's been very smart. What it's also been is very fast. And we see that in the options market, where silver in particular over the last few weeks, the open option contracts have absolutely skyrocketed. And that's in large part, why it propelled the heights to which silver went. Now, let me be clear. The direction of silver, both to the upside and today to the downside, is definable by market forces, namely concerns about the dollar, concerns about the Fed independence, which may be put